Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Friday expert, Mr. Stephen Dow. How are you?
Fantastic. Yourself?
Awesome, man. One of the things we do on this channel is we bring on experts. Thank you again for being a consistent guest on Fridays. But also we educate. So one of the things I want to do here is we're going to take three pieces of vocabulary that is very comfortable for you, that has become comfortable for me, but we're going to get a chance to kind of break it down for folks. But before we do that marketing thing. I don't want to get in trouble.
Thank you. Although, again, I work very happily for Velocity Mortgage Capital. All the ideas and topics discussed on this channel that of my own. So let's get it finished.
There you go, buddy. So the three pieces of vocabulary we're going to talk about, the first one is something that in the mortgage industry is called compensating factors. So why don't you break that down as the professional, and then I'll share my non-professional opinion.
Well, in our world, not every deal is cookie cutter. Right? Meaning exactly the same, fits a box. That's why they come to us. Because after, being denied with conventional and, other challenges due to how you, file your income, things of that nature. In many cases, there are certain deficiencies as far as your overall profile to be able to get conventional financing. So in our world, the term compensating factors can mean so many different things to offset some of those deficiencies to allow us to then do the deal still as an exception, even though it doesn't fit our normal guidelines. So for example, if your, DCR is a little bit on the higher side, we can kind of offset that.
Let's not use acronyms. DCR is?
Right, debt coverage ratio. So that's the term where you're comparing the net operating income of the subject property to that of the mortgage payment. So there's a certain ratio that you have to kind of meet. And if the property isn't, garnering enough in rent to kind of meet that ratio, we can sometimes offset that or overlook that if you've got, good FICO scores, or if you've got, a certain amount of reserves, meaning number of months of PITI monthly mortgage payments in reserves for at least 3 to 6 months, then we can offset that and say that that's a compensating factor, because if anything should happen, you got about 3 to 6 months of kind of a buffer to try to rectify it, or have that at least amount of assets to pay somebody to fix it. So things of that nature to offset that deficiency. So compensating factors can mean so many different things. And so that's what helps us to be a make sense lender. Because again, if you're in the conventional side, a computer is not going to look at that. They're just going to see either you fit the LTV, your ratios are at a certain amount, how long you've been on the job, and full documents for your tax returns and everything else. So from that aspect, the compensating factors really help us to
this is what it is to me. And again, you're the professional, I'm not. So in my simple mind, right, there's a base rate, right, whatever it is, 4, 5, 12, whatever it is. And then what happens is the deal, right, the package that you're evaluating, which is the person and the asset and the plan, right? And plan / experience. I think there's kind of three, in my world, there's like three things, right? The person, right? What is their credit score? Is their income document, blah, 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 right? So, and again, the beauty of a compensating factor is it could be a plus or a minus on the base rate. Maybe you have a perfect credit score, never did this, and you use credit well. So maybe the base rate goes down, right? Or you don't have credit and it goes up.
Correct.
Then there's kind of the deal, right? Is it are you putting 50% down, or is it a junker that needs, you're paying 50, but it needs 150 in remodel? I mean, then there's the deal again, plus or minus. And then there's the experience of the lender and what you're looking to do and the plan. So the reason I value you being a part of this channel is really the non-QM space, but you to me, right? There's obviously thousands of you out there, but you're the only one on my channel. You evaluate all three of those.
Right.
And, some again, positive, negative, but that's why people need to email you, call you early, tell you what they're thinking about, so they know where they're at. Because, maybe they're calling you hoping to get, 4%, but again, they've got no credit, no this, no that, no experience. You're like, I can't do 4. It's going to be 5 or 5.5 or whatever. I'm just making these up. But that's why I think people need to appreciate that the building and your experience, plus or minus, that's what a compensating factor is to me. Does that make sense?
It does. And it's always worth a conversation, because if you're finding, financing challenges on your normal, search for whatever it is that you need. But it's worth a phone call, because in many cases, if I can't do it, I'll try to point you in the right direction. My current network where, either if I can't do it, I try to just throw it over the fence. There's no, oh, I know this guy, let me charge you an extra 5 points on top of that. So, hey, I can't do it. Here's who you should call.
Yeah.
You know what I mean?
Just be done, right? Move on, process quick.
Well, because again, once I lead them down the right path, at some point, they're going to be circling back because it's not if you need me, but when.
I agree.
Because either you hit the maximum limitation on conventional financing, or at some point, you're just not going to qualify anymore because, those ratios get really, really tight.
Yeah. And if lenders get tight again.
Yep.
Yeah.
So at some point, you're going to need me either due to the scenario itself, the condition of the property, because sometimes it's not conventional, you know what I mean? It doesn't pass the smell test in that aspect. And so there's so many different areas that we can accommodate financing versus your traditional or conventional financer, and then as well as better terms versus your traditional hard money lender. So that's where the space that we're somewhere in between. So I think that people are starting to slowly get that, especially if all they're exposed to is private money or local banks.
Yeah.
For residential 1 to 4 units, local banks are throwing them into commercial loans, right? Short-term fixed, 20, 25-year AM, even on residential properties.
Yeah.
So we're getting a lot of those to call in too, because again, short-term fixed, shorter amortization. We go 30-year fixed, 30-year AM, just blows our mind.
Yeah.
Yep.
All right. So here's number 2. You actually mentioned it earlier, but I want to hit it again so people know what a make sense lender is. What is that?
Well, again, on the conventional side, you either fit the box, you meet the ratios, mid FICO score, all these, industry standardized requirements for conventional financing. Whereas with us as a make sense lender, sometimes even you don't fit any of that box or even our boxes, but if it makes sense, we're going to do it. Yeah. I don't want to give out too much, but recently we funded a very large single family SFR, no DCR, meaning no debt coverage ratio needed. It was above $6 million.
Oh, wow.
So
that's a nice house.
And that's a very nice house.
That's some good living right there.
Right. And that was even at, I believe, at a max LTV of 75%. So you should know that anything above really 2 million, 3 million is never going to debt service.
No, of course.
So at that time, though, that's well beyond our normal max as far as for residential properties. But I believe the borrower had well over 200 million in real estate, and she had like a 780 something FICO score, and I forgot how much money in the bank, but it was a lot. So
it was a safe loan. When you did all the compensating factors together, it's like, yeah, we can do that.
She's never been late on anything. I think like 20 something years. She's got over 200 million in real estate.
Yeah.
She just needed this fast. She didn't want to wait anymore because the whole, because she's very complex as a borrower, and they promised her, oh yeah, fast speed. And she paid a little bit more in rate.
Of course.
More fee, but she's like, speed. I just want the speed. And makes sense, because it was like,
what a makes sense lender is to me, and again, I've experienced because I've done business with Velocity, is you're not a computer model, right? I think there's a lot of things going on in the mortgage industry, which again, I think a lot of companies are going to cut staff and get bought. I think there's going to be a lot of consolidation in the mortgage industry.
It's been doing it. Looking at, what was that, better.com, I think, or something like that.
Crazy.
Nice phone call from the CEO.
Not a good look.
That would give me PTSD. Anybody else, like, you want to do Zoom call? Wait, what Zoom call?
Not a good look. But again, what I'm going with this is those computer models, they don't have feelings, right? They don't ask questions. They don't dig deeper. It's like, nope, you're out. You don't fit. And they just throw people. They're not throwing people. They're throwing files out.
Right.
They say less to a very, very, and
again,
again, I think
approved eligible or not. That's
and I think it's going to get tighter and tighter. So again, a make sense lender to me is a person. It is somebody who has experience, someone that's going to ask questions and listen, and a la do a deal that they normally wouldn't do on $6 million in your example. So that's what a make sense lender is. So number 3, and the final one I want to talk about, is asset-based lending. What does that mean?
Yes. Well, again, on the conventional world side, to qualify a borrower, typically they're going to look at, all the aspects, like you said, credit worthiness, income, obviously, as far as what you get paid a month, and then the asset itself. So in this case, asset-based only is you're not going to be too concerned about the income part. So it's mainly going to be based on the asset or the house itself, as far as the likelihood of repayment or things of that nature. So that's what's leveraged. But in our case, it's not just asset-based. We're somewhere in between. That's what I would say hard money or private money is really just looking at asset-based, because if God forbid you default, you just take the property, and they would almost, I don't want to say that that's really what they want for you is default, but they wouldn't mind.
Oh, there's some predatory lenders. I've been involved with them. I know. It's like,
no, I don't want to like generalize.
Oh, I will. I will.
Agree with you, but I don't want to.
I will do that. There are some lenders out there. I know them. I've spoken with them. They're like, we
Right.
expect 30% of our loans to go bad, and we get real estate at a discount. That is
Yes.
their business model. I'm
right.
like,
No, that's not
wow.
ours. We don't want. Yeah, we're
No.
not trying to be a real estate holdings company. We want our money back.
Yeah, you're
so
just
that's not
churning
what
it. Yeah,
Right,
cycling it or
right,
whatever the right word is.
Right. So, but no, as far as asset based, that's what it basically means. So if you're having issues, qualifying, conventional, things of that nature, you can go to an asset based lender. Obviously, you expect to pay a little bit higher interest rate, but the ease of use and qualifying is going to be the determining factor. But other than that, that's pretty much what asset based is.
Yeah, again, this is my opinion, not yours. Asset-based lenders to me are all about the asset. Right? They get a lot of press, perhaps, or a lot of thoughts because people don't know. They're very expensive. They don't have the compensating factors about the borrower and experience. It's all on the widget that the
Right.
loan is going against.
Right.
Typically, the ones that I've seen are very short term. Again,
Right.
they are an event-based, asset-based, right? It's like you're going to
Correct.
flip this, or you're going to buy a
Correct.
dog and burr me out. More expensive, lots of rules, skin in the game. And again, what I have seen, not you, what I have seen is some of them are like 30% of these we're going to get on the cheap. So pretty crazy stuff. Dude, I want to thank you for this. You're going to get a lot of phone calls this weekend. What is your email and how do you want people to reach out?
Please, sdow@velocitymortgage.com. In the subject line, please leave the acronym ORAAT. In the body of the email, please leave a brief description of the scenario you're looking to inquire about, and or maybe some general terms, property type, your mid-FICO score, price range, desired LTV, I guess. And then at the very least, if not the property address, the city and state, just to make sure we lend there. And then best phone number to call you back at, just to reduce the amount of emails going back and forth. So, and then last but not least, if for whatever reason you get stuck in quarantine and or you slip through the cracks and it's been several days, please just try back again. I promise you, it's just overwhelming. So many emails that I sometimes only 24 hours a day. And there'll be people that attest. I've called or tried to reach them at like 11, 12 o'clock at night. And that's the only time I can call them. But it's unfortunately so. But yeah, we're trying our best, but I'm definitely here for everybody. This has been such a great and rewarding, positive experience. People on this channel are awesome, very nice, very patient, and a lot of them are quite knowledgeable in the sense of they get it. They hear the message, and when we do the math, they're like,
"That's awesome."
It's just now I'm on like the third, fourth, and fifth series of loans for some of your people here. So thanks again for the opportunity, Mike.
No, I appreciate it. You're bringing value to the channel. You're covering a topic I don't know about. You are an expert on purpose because you allow us to do some things. So folks, playlist below, 3 amazing videos today. Have a wonderful time. Remember, I'm looking for 10 or 15 new people to ping them this weekend. SDAO, that is DAO, SDAO @velocitymortgage.com. Thanks, bud.
Yes, sir.